In this lesson, we will discuss qualitative risk analysis. Qualitative risk analysis is one of the primary methods used in risk management. So let's dive into the concept of qualitative risk analysis and its key components of the likelihood, probability, and impact of a given risk. So what is qualitative risk analysis? Qualitative risk analysis is a method of assessing risk based on the potential impact and likelihood of their occurrence. It involves categorizing risk as high, medium, or low based on the potential effect of the project objectives. Now, this method is subjective and relies on the expertise and experience of the project team and stakeholders, and it also avoids the complexity of the quantitative approach. Now, in the context of qualitative risk analysis, likelihood and probability refer to the chance of a particular risk occurring. It is usually expressed qualitatively as low, medium, or high. The likelihood of a risk is determined based on past experience, statistical analysis, or expert judgment. The impact, on the other hand, refers to the potential consequences if the risk materializes. The impact could be in terms of cost, time, quality, or other critical project objectives. Like likelihood, impact also typically is rated qualitatively as low, medium, or high. The impact of a risk is assessed based on the potential damage it could cause to the project or business operation. A low impact means that there is minor damage or loss and essential functions are still operational. A moderate or medium impact means there is a significant damage or loss to assets. A high impact means there is major damage and essential functions cannot be performed. For example, in a software development project, one potential risk could be the possibility of a key team member leaving during the project. The likelihood of this risk could be assessed as medium risk, considering industry turnover rates and the project's duration. The impact could be high, as the departure of a key team member could lead to delays, increased costs, and potential quality issues. In this scenario, the project manager, using qualitative risk analysis, might prioritize the risk and develop mitigation strategies. These could include cross-training team members, documenting process and knowledge, and implementing a strong employee retention strategy. Another example would be in the construction industry. A potential risk in a skyscraper building project could be delay in the delivery of critical materials. The likelihood of this risk could be assessed as high, considering potential supply chain issues, vendor reliability, and external factors like weather or transportation disruptions. The impact will also be high, as delays could lead to increased costs, schedule overruns, and potential contractual issues. In this case, a project manager might prioritize the risk and develop mitigation strategies such as securing multiple vendors for critical materials, scheduling deliveries well in advance, and maintaining a buffer stock of essential materials. So remember, qualitative risk analysis is a method of assessing risk based on their potential impact and the likelihood of their occurrence. Likelihood refers to the probability or chance of a particular risk occurring. It is usually expressed qualitatively as low, medium, or high. And finally, impact. Impact refers to potential consequences if the risk materializes. It could be in terms of cost, time, quality, or other critical project objectives. Whatever industry you're in, effective risk analysis is key to navigating uncertainties and achieving project objectives.